Hey, what's up guys? Welcome back to Aimstone channel. As you guys know, I conducted couple interviews and I received very positive feedback from you guys. So now I'm going to bring more guests and they are highly influential. In 2 weeks, I will be having interview with Peter Chief. Hopefully I can orange peel him and hopefully he will buy some Bitcoin. And then maybe in a month later, I will have an interview with Robert Bridlow. So yes guys, stay tuned and just keep an eye on these upcoming interviews. Okay, moving back to today's Bitcoin price. As we can see that today BTC is slightly on the lower end. Right now we are slightly above $26,000. So yes, BTC was around $27,400 and now it gradually declined to about $26,000. But you may ask why this is happening. Because Bitcoin still has close correlation to stock market. We know that stock market was spooked recently by Jerome Powell and so is in continuing to decline. And in the short term, Bitcoin declines as well. From the technical standpoint, we can notice that BTC is on the verge of breaking below 50 days moving average in this 18-hourly chart. I hope this is not going to happen and BTC will be held at $26,000 level. But let's see if we will find out very shortly. Speaking of the Bitcoin Fear Grid Index, today we are at 46. Last, then we were back yesterday. Yes, when price declines, market becomes more fearful and people more reluctant buying Bitcoin. That's exactly what happens during the decline. Look at this. If we take a look at the Bitcoin versus S&P 500, yes, there are some correlation, but Bitcoin year to date outperforms S&P 500 by a mile. Year to date, BTC is up by 55%, while S&P 500 is up by only 12%. But look at this, since the beginning of September, S&P 500 started to decline. It dropped by more than 5% to this current 4,300 basis points, while BTC is holding up quite well. So if Bitcoin is a leading indicator, maybe the stock market will invert upwards. Even if we compare Bitcoin to gold, which gold is Peter Chief's favorite asset, Bitcoin still outperforms gold by 10 miles, possibly even more. Gold technically year to date is flat. In January it was around $1,900 per ounce and now it is at $1,900 per ounce. While Bitcoin remains elevated at least since the beginning of the year. Yes guys, once again, do not be caught up in a short-term volatility. Short-term volatility is just noise. Look at the bigger picture. And look, if you look at the bigger picture at the gold chart, we can notice that gold has been flat for the past 13 years. Yes, in 2011, gold reached new all-time high, slightly below $2,000 per ounce. And now it's still below $2,000 per ounce. So basically, if you bought gold 13 years ago, now you would just break even. In my opinion, this is not the best investment, but once again, maybe I am cherry picking certain time frame. But yes, if overall you look at the long time frame, you will know which direction the momentum is going. Okay, what the hell is Robert Kiyosaki doing? He say bye-bye Bitcoin and US dollar? What? Citibank announced today it is offering bank blockchain technology to turn institutional savings into Citibank tokens, which can be used for instantaneous 24/7 cross-border transactions. Bye-bye BC? What the hell is BC, dude? It's BTC and US dollar. Well, I'm kind of disappointed with Robert Kiyosaki because I thought he actually understood Bitcoin at least a little bit. Yes, he actually said that he owns a couple of BTC, but now he say bye-bye Bitcoin because there is some centralized entity said that they will create their own shitcoin. How the hell is this shitcoin going to be different from any other altcoins? It's not. And in fact, how the hell is it different from US dollar? It's not. It's still centralized garbage that can be manipulated and rehypothecated any period of time. Bitcoin is different. Bitcoin has a limited supply and most importantly, Bitcoin is decentralized and it is secure. Come on, Robert, wake yourself up. Guess who's buying more Bitcoin? Of course, Michael Saylor. MicroStrategy has acquired an additional 5,445 BTC for more than $147 million at an average price of $27,000 per BTC. As of yesterday, MicroStrategy held more than 158,000 BTC acquired for $4.68 billion at an average price slightly below $30,000 per coin. Yes, Michael Saylor definitely has a diamond hands and he's stacking more sats despite that Bitcoin price is being down. Buying $27,000 is still a bargain, even though right now BTC is at $26,000. This chart actually represents MicroStrategy dollar cost average. So yes, as right now, if you look at the paper, MicroStrategy is down by more than $567 million in paper losses. However, in my opinion, paper losses does not mean anything important because of course when you buy an asset, you want that asset to correct right away, but usually that's not how it happens. It fluctuates, and that's exactly what happened to BTC when MicroStrategy started buying. Anyway, yes, average price they pay for BTC slightly under $30,000, and right now BTC is slightly about $26,000. So technically right now they are losing more than $3,000 per single BTC. Okay, guess who owns more BTC than MicroStrategy? Coinbase. Coinbase holds $25 billion in Bitcoin, 5% of total Bitcoin circulating supply. The amount of Bitcoin held by the American crypto exchange rival that held by pseudonymous Bitcoin founder Satoshi Nakamoto. The Ingman Nakamoto, who famously authored the first Bitcoin white paper in 2008, is thought to have mined up to $23 billion worth of Bitcoin, roughly 1.1 million BTC in his lifetime. While 1.1 million BTC will be way more than $23 billion, it will be more than $26 billion. However, Coinbase holds more than $25 billion in Bitcoin in its custody, distributed among 36 million deposits and holding addresses. The US-based Coinbase is now world's biggest Bitcoin custodian, according to Acme Intelligence, which believes the company's digital assets holding are probably larger than this. That includes Bitcoin holdings and that have not been uncovered yet. Coinbase, biggest cold wallet, has approximately 10,000 Bitcoin. Well, I'm pretty sure that Michael Saylor custodies his Bitcoin with Coinbase. Maybe his stack is distributed among different hardware wallets. Most likely, that's exactly what happened. Now, let's move on and take a look at some interesting Bitcoin charts. This first chart represents total supply held by the long-term hodlers. As we can see that the total supply held by the long-term hodlers is approximately 15 million BTC. Actually, slightly less. Anyway, 15 million BTC would be more than 75% of all BTC in circulation, which is insane. That means that 75% of all BTC in circulation are currently belong to illiquid supply, which means that they are not that easily to sell even if you choose to. Moving on, this following chart represents M2 growth by the major central banks, that is in this bluish color, and of course we have logarithmic Bitcoin price action, that is in this yellowish color. And yes, every time they print more money, every time M2 grows higher, Bitcoin goes higher. In fact, that's what happened in 2012, in 2016, 2017, as well as 2020, 2021. And look at this. Right now, yes, it looks like in 2022 we had deflation in M2 money supply, and so Bitcoin went into that bear market. However, now we see signs that they're about to print more money once again. And of course they will. They're addicted to printing money. It literally costs nothing to debase money. Okay, moving on. This following chart created by the Russian root. This chart represents halving in progress. Right now we are 85% in progress since the last Bitcoin halving, which means 15% is still yet to go. 15% means there is roughly 7 months until the next Bitcoin halving that will take place in April 2024. And right now, in my opinion, it is a perfect time to prepare yourself for the upcoming bull run that maybe it will take place by the end of this year or possibly next year. Another cool chart from the Russian root. This chart represents paper Bitcoin versus real Bitcoin. According to the Russian root, there are 14% paper Bitcoins, and according to Willivu, there are as much as 20% paper Bitcoins. Well, in my opinion, this is not a lot at all, as you know that banking system and fractional reserve rehypothecated Bitcoin up to 100 to 1, which is insane, but having 14% or even 20% rehypothecated Bitcoin is not high at all. So it tells us that there is not much leverage in Bitcoin market. Okay, now let's take a look at this quick video where Mike Blush, CEO of BitGo, will explain what he thinks and when Bitcoin spot ETF will be approved. Let's take a look.
What then do you think is the likelihood of getting a spot Bitcoin ETF? There's some murmurs that this should happen in the first quarter of 2024. What's your forecast?
Look, I'm optimistic. There's a number of good players. Valkyrie has been out there, I think, the longest of anybody with a spot ETF application. Now BlackRock, a traditional financial firm, is very clear they want to go after it. I saw a stat, I might not have this quite right, but in BlackRock's history, they've had over 500 ETF applications and only ever been rejected once.
Yes, that is correct. I don't know if it's 500, but I know that they've only been rejected once for every ETF application.
You guys can check that. But the point is they've had a pretty good success ratio.
Near perfect rate.
We'll see how this goes. I mean, look, from my spot in the industry, being in here for 10 years, there's something that's been happening in the US which is unusual. And under the previous administration, I'm not trying to be political here, just towards the end of his administration, he put in Brian Brooks of the OCC, who then started opening up, crypto into banks. And he said, look, if we're going to have crypto used globally, we want to have our biggest, best, strongest banks be able to help secure that. That made sense. Now, no legislation changed, no regulation changed, and yet somehow a new administration comes in and the rules changed. So as a business operator, I want to know, what are the rules, and we will go meet those rules. But if all that happened is you had a new president take over, and now the rules are interpreted completely different, how do you build business around this? This is a very strange place to be. So because of that, when it comes to answering the question of will we get an ETF approved, this month or next month, I don't know. There's something which is not related to the regulation or the legislation going on. I don't know what the rules are.
So you're still not clear whether a spot Bitcoin ETF will be approved at all let's say in 2024 under the current administration?
Look, over time, I definitely think we get one approved, but the objections that have been put down to date, and there's been many, and it's been repeated, I don't know how many spot ETF applications have been out there. It's somewhere like 20 or 30, right? They're all rejected for all these various reasons. And now we've got the courts coming in saying that, the SEC is acting in a capricious manner against the GBTC conversion, which is very strange. Regulators should be just applying the rulebook. Here's what the legislation says, here's what the regulation says, and here's the answer. This should not be ambiguous.
So why do you think it is happening like this? Why do you think the SEC and Gary Gensler seem so reluctant to approve a spot Bitcoin ETF and are making things ambiguous and murky and capricious?
Right? I mean, it's obvious. It's political. It's not actually a matter of law. And that's why it's very difficult to predict whether an ETF is going to be approved next year.
What do you mean by it's political?
That means there is political pressure that has nothing to do with what's written or the regulation that's written, and instead it's about people's influence inside of Washington. So right after Biden was elected, remember Senator Liz Warren showed up and very publicly said, we're going to unwind all that crypto stuff. And she encouraged Biden to do that. She's very much in the center of a lot of what's going on with the SEC and also with the Biden administration. There's a political influence that's happening. The laws didn't change, and yet the rules did. How can that possibly happen in the United States of America?
As Mike Blush stated, according to the current law as well as legislation, there is no reason why Bitcoin spot ETF had not been approved yet. We have Bitcoin futures ETF, so why there is no Bitcoin spot ETF? It makes no sense. And he said that the main reason why we still do not have Bitcoin spot ETF is because of politics. There are a bunch of influential politicians that actually do not want to see Bitcoin spot ETF because they know that when this is going to happen, BTC will skyrocket. As you know, those people, they are at the top. We are all familiar with Cantillon effect. The closer you are to the top, the more available access you have to that money. But for regular people like you and me, we do not have that access. So of course, regular people want to see Bitcoin at higher prices. Anyway guys, let me know what you guys think. Comment below, subscribe, and like this video.